It's been a very busy banking sector. We've had pre, recap, and post. And we've seen some of those movements, for instance, Wema Bank, and then First Holdco. But apart from the individual banks, what does this tell us? Or perhaps your reports from Proshare on the Tier 1 banks, what does it tell us about the health status?
Okay, thank you very much, Ini. Number one thing that came out of the report that we had not analyzed in previous reports was that comparing Nigerian banks to African banks, where do we play? The mean price to book value for African banks, the whole cohorts we analyzed, which was about 45, was about 0.99 multiple, that's times. Every Nigerian bank was below that multiple. Every single Nigerian bank was below that multiple. And it's not new, because if you look at last year, we weren't even in the top 20 banks in Africa. Well, don't let me say we weren't in the top 20. We weren't in the top 10. But in terms of the top 20, we're at 15, 16, 17, and then 19.
So even towards the end part
of the thing. Now, recapitalization came in. That has restructured this narrative. We've seen more Nigerian banks get into the top 10, which is brilliant. And of course, much more in the top 20. And that generally is the direction we wanted to see Nigerian banks. But it's not just about size. Our report emphasizes quality, capital, the quality of the capital. And remember, under Soludo, Governor Soludo, currently Governor Soludo was the governor of the central bank then, he's now a governor of a state. We did the same exercise, right? So we moved banks from 2 billion naira to 20 billion naira, 10 times. Exactly what we're doing now. We moved it to 10 times. But what did it translate to? Did we see the economy expand? Do we see the kind of
credit to real economy?
Yeah, to the real economy. We didn't see that. But that was one of the purpose of those reforms then, that recapitalization. So currently, the CBN, in its wisdom, has reviewed the whole system and said, look, it's not just about scale. It's about strength. How strong are these banks? What is the quality of capital that they have? And that's what we did a deep dive into in this recent report. So that's why you see a Wema Bank, who most people would have wondered, how in heaven's name did they get into the top? When we have a further conversation, I'll explain why. But that is precisely...
I think you should go ahead and tell us why.
I should tell you.
And help us to understand this massive movement around First Holdco too.
Okay, let me start with Wema. Because we were looking at efficiency in the banking sector, we looked at real return on equity. Wema Bank has the highest real return on equity, 23.01%. So even GT that came to the top had a real return on equity of 8.75%. So the bank might be relatively smaller, 260 billion actually currently, if you look at their total capital, but they are very efficient. And they've made sure that their cost to income ratios are low. Same thing for GT. Now let's come to First Holdco. Obviously, one of the big boys in the system, right? Over 100 years old. So we expected that this...
Are they still the biggest market cap in the figures?
No. There are banks that are higher than them. And we have the Zenith, we have the Access banks, and then they follow after ETI. But the good thing here is the quality of First Holdco's loan assets. They've cleaned up their books, right? In the past, yeah, they were big, but they had problems with their loans and advances. And so loan loss provisions were very high. Currently, we've seen a reduction in loan loss provisions. Most importantly for us, cost to income ratios are much lower. First Bank, we used to have cost to income ratios above 60%. Currently, they're in their 40s. So it's not a surprise that one of the key stakeholders says, look, I think there's something here, and he decided to increase his stakes. It's not a surprise that they're at 105. As the last time I checked, 105. From 95, they went 10% in a day, went up to 105. It's not surprising.
They hit 110 at some point.
Yes, at some point they did 110. Yeah. So that's understandable, trying to catch up with GT. I didn't say so. But it's important to know that First Bank is currently re-engineering itself, repositioning itself to where the new major stakeholder wants it to go.
So we know that there's high interest rates. We know that CRR is at 45%. But if with all of these good qualities, we don't feel the impact in the real sector, then it's almost for nothing.
Okay, let's put it this way. There are certain things that are beyond the bank's capacity, and they revolve more around regulatory concerns. The central bank, rightly, has decided that it was more concerned about inflation. Inflation is 15.91%, not yet at the lower rates, the single-digit rates that the CBN expects. And since it's no longer at that rate, we expect that the policy rate will still remain high at 26.5%. And as long as that policy rate remains that high, and then you have a high cash reserve ratio, not much will happen. The cash reserve ratio is at 45%. At Proshare, one of the things we have argued is that, you know what, keep your rate where it is, but reduce your cash reserve ratio. Bring that cash reserve, creating more liquidity in the banking system, therefore allowing more money to go to the real sector that you're talking about at competitive rates. Because at 30%, 32%, it's really difficult to make any meaningful margin on those kind of rates. So yeah, that's our general
So
take.
apart from that recommendation on the Sierra, what other recommendation comes from your report?
Well, less of recommendations and observations, really. Banks will do what banks do best, make money. But for us, like you've rightly pointed out, real sector, we've recommended that we have to find a way of following resources to the real sector. We may need to be more creative in the kind of loans we give to the sector. So we segment the sectors, target them in respect of their growth potential, and funnel them there. We call it the plumbing. We need to reorganize the plumbing of the Nigerian banking system. And we think the regulators could help a lot in doing that.
All right. I hope you have words with them. I know that Proshare is very influential in the financial sector. So
we think so.
We hope you use your influence in this area. Thank you so much, Director of Research at Proshare, Mr. Teslim Shitabe. Thank you for
very
your
much.
time.
It's been a pleasure being here.